And in our top business story, a sell-off across the region has wiped billions from stock exchanges yesterday as investors reacted to weakening oil prices, the lifting of sanctions in Iran, and market turmoil in China. Shares in Doha led the retreat, plummeting 7.16% to their lowest level since April 2013. Saudi Arabia's headline index fell 5.44%, closing at its lowest since March 2011. Locally, Abu Dhabi officially entered a bear market as it dropped 4.24%. It has lost almost a quarter of its value since July, and shares in Dubai ended 4.64% lower. Brent crude futures closed below $29 per barrel for the first time in 12 years on Friday, responding to the fresh sell-off in China and the return of Iran to the international oil market. Meanwhile, the International Atomic Energy Agency yesterday confirmed that Iran had complied with the terms of a deal on its nuclear program, struck in July, paving the way for the lifting of US and EU sanctions on the country. Iran plans to increase its crude exports by 500,000 barrels per day, according to the state news agency IRNA, threatening to put further pressure on crude oil prices. Etihad Rail said it is streamlining operations, including a number of job cuts, as it seeks greater efficiencies. The operator, which is developing the country's 40 billion dirhams, 1,200 kilometers rail network, has completed the 266-kilometer first stage, with freight trains transporting sulfur from Shah to Habshan to Ruwais for export. The tenders for the 628-kilometer second stage, which links Khalifa and Jabal Ali ports to the Saudi and Omani borders, are expected to be awarded soon. According to local reports, a statement from the company said that it has introduced a restructuring initiative across the company to further streamline its operations as well as international procedures and processes, adding that the changes involve a number of staffing adjustments as well as move towards a flatter management structure. According to a Bloomberg report, Etihad Rail will slash almost a third of its workforce. With oil prices below $30 per barrel, the first time in the 12 years, governments in the Gulf region are under pressure to rein in spending. In October, the UAE announced a trimmed federal budget for this year, and last month, the Ministry of Finance data showed that the government spending fell by 21.6% in the 3 months to September against the same period in 2014. The $25 billion GCC rail project was initially slated to open in 2018. Dubai's largest bank, Emirates NBD, has posted a 74% rise in fourth quarter net profit today. The first lender in the UAE to announce its quarterly earnings made a net profit of 2.13 billion dirhams in 3 months to December 31st, compared with 1.23 billion dirhams in the same period of 2014, according to its board statement. The bank, which is 55.6% owned by the Investment Corporation of Dubai, said its annual net profit for 2015 was 7.12 billion dirhams, up 39% year-on-year. ENBD's board of directors has recommended an annual dividend of 0.40 dirhams per share for 2015, up from 0.35 dirhams proposed for 2014. The results have contrasted with signs of stress in the other parts of the country's banking sector that have come under pressure given a weaker economy due to lower oil prices and tighter liquidity. The amount of cash ENBD set aside in the fourth quarter for bad loans dropped 49% on year to 599 million dirhams. And Emirates Islamic today announced its full-year financial results for 2015, with the bank reporting strong growth for the fourth consecutive year. For the 12 months ending December 31st, 2015, the bank reported a net profit of 641 million dirhams and 76% year-on-year increase. The bank's total net income during the period rose to 2.43 billion dirhams, up 25% compared to 1.95 billion dirhams in 2014. In addition, the bank stated that financing and investing receivables were up 31% to 34 billion dirhams, while deposits were up 25% to 39.3 billion dirhams. Commenting on the performance, Jamal bin Ghalaita, the Chief Executive Officer of Emirates Islamic, stated that the bank's strong performance in 2015 is on the back of robust growth and high customer acquisition across three core segments, namely corporate, individual, and SMEs, resulting in a 26% increase in the bank's customer base.